As of right now, Tuesday, May 12, 2026, the market is currently open and Resolve AI PLC, trading under the ticker RZLV, is priced at $2.72 per share. We are seeing some serious intraday momentum, with the stock climbing over 13% today from its previous close of $2.40. While a 13% jump usually suggests a massive headline, the real story here is a fundamental disconnect between how the retail market perceives this company and what the institutional books are actually showing. Most people looking at their Interactive Brokers trading screen see a small-cap AI play that has been volatile, but the reality is that Resolve AI just reported first-quarter revenue for 2026 that actually exceeded their entire audited revenue for the whole of 2025 in just 90 days. We are talking about $60 million in a single quarter compared to roughly $47 million for all of last year. This is the kind of explosive scaling that forces a rethink of the entire investment thesis. The common narrative for anyone using investing sites to track these names is that AI software is a crowded field where margins get squeezed by compute costs. That is the expectation. The reality with Resolve AI is that they are operating with core software margins exceeding 90%. When you look at their brain suite, it is effectively acting as the transaction engine for what they call agentic commerce. Investors often expect these high-growth tech firms to be constantly diluting shareholders to stay afloat, but management has been very vocal about having zero requirement for additional operational equity to hit their 2026 targets. They are sitting on a fortified balance sheet after securing over $750 million in total funding. This is a massive shift in expectation versus reality. While the general public might still see RZLV as a speculative penny stock relative to something like Nvidia stock or Apple stock, the institutional activity tells a different tale. Looking at recent 13F filings, we see big players like UBS Group and Nuveen significantly increasing their positions. UBS Group recently increased its stake by over 260%, holding more than 2.2 million shares. When institutional brokerage accounts start loading up like this, they aren't looking for a quick flip. They are looking at the $360 million revenue guidance for the full year 2026. If they hit that, we are looking at roughly 7.5 times year-over-year growth. This creates a massive curiosity loop for anyone involved in online investing. How does a company go from $47 million to $360 million in 12 months? The answer lies in their contracted revenue base. They exited last year with over $232 million already under contract. This isn't just projected growth, it is a floor that provides high conviction for their 2026 mission. If you are using the Robinhood app or SoFi Invest to track your portfolio, you've likely noticed that RZLV often moves in sympathy with the broader AI sector, but it has a beta of 3.35, meaning it is much more sensitive to market swings than your average individual brokerage holding. This volatility is exactly where the tension between expectation and reality plays out. The market expects high risk, but the company is delivering high visibility revenue. The recent integration of their SQD token on platforms like Revolut has also opened them up to over 70 million users globally, which adds a layer of consumer-facing growth that many analysts haven't fully priced in yet. When we compare this to the stability you might seek in something like Fidelity Mutual Funds or Schwab Intelligent Portfolios, Resolve AI clearly sits on the aggressive end of the spectrum, but the fundamental execution is starting to bridge that gap. I want to pause here for a second and get your take on this specific sector. Comment below how many shares of Resolve AI you currently hold, or if you are waiting for a specific price target before jumping in. Now, let's look at the daily swings we've been seeing. In the last session, the stock hovered around $2.40, and today's push towards $2.72 shows that buyers are stepping in as the realization of their Q1 performance sinks in. We are seeing trading volumes that frequently surpass the 15 million mark, which is substantial for a company with a market cap just under $1 million. This level of liquidity is important for self-investing because it means you aren't getting trapped in a position with no exit. If you are comparing this to other investing sites' picks, you'll see that Resolve is currently outperforming many of its peers in the mobile commerce AI space. The institutional confidence we see from Vanguard and BlackRock adding shares further validates the idea that the agentic era of commerce is being built on this infrastructure. To understand why this matters, we have to look at what Resolve AI actually does. They aren't just another chatbot. They provide a mobile commerce platform that uses machine learning to turn any physical or digital media into a transaction point. Imagine seeing a product in a video and being able to buy it instantly with a single tap, with the AI handling the search, fulfillment, and personalization. They have over 950 enterprise customers, including major players in retail and hospitality.
Their BrainPower LLM is purpose-built for commerce, meaning it focuses on zero hallucination risk at the SKU level. This is a very different business model than the general-purpose AI we see from the giants. While NVIDIA stock provides the hardware and Apple stock provides the device, RZLV is trying to be the software layer that actually closes the sale. The macroeconomic pressures of 2026 have made efficiency paramount for retailers. High interest rates and shifting consumer habits mean brands can't afford to lose customers at the checkout stage. This is where RZLV's value proposition hits home. They claim to reduce the enterprise AI adoption cycle from 18 months down to just 4 to 6 weeks through native cloud integrations. For an investor using a SoFi trading platform or interactive brokers, this speed to market is a critical metric. It means RZLV can turn a lead into a revenue-generating client faster than almost anyone else in the space. The expectation is that enterprise software is slow and clunky. The reality of RZLV is that it is agile and scales almost instantly. We should also talk about the risks because no high-growth play is without them. The integration of acquisitions like Group B and Vicensense into the Brain Suite is a live execution test. If they can fold these in without eroding those 90% software margins, the upside is massive. However, if the integration is messy, that $360 million guidance could be at risk. This is the contrarian take. While the consensus rating is a strong buy with price targets as high as $10.50, the market is still pricing the stock at under $3 because it wants to see the proof in the upcoming quarterly reports. The tension here is between the ambitious guidance and the reality of enterprise rollouts. For someone managing their own portfolio through Fidelity Wealth Management or Robinhood stock trading, this is the classic show me story. Looking forward, the catalysts for the rest of 2026 are clear. We are looking for the company to hit its $500 million annual recurring revenue exit rate by December. If they achieve that, the current valuation will look like a significant oversight by the broader market. The platform has already processed over 112 billion API calls, and they are reaching nearly 60 million consumer devices. This isn't a pilot program, it is global infrastructure scale. For those of you looking for investment help or exploring investing sites for the next big breakout, the data suggests that RZLV AI is moving from the fringes into a core position within the AI commerce sector. When you sit back and look at your individual brokerage account, whether you're holding Tesla stock or exploring Fidelity ETFs, the question is always about where the next leg of growth is coming from. The expectation for RZLV was that it would be a slow burn. The reality is a 543% growth in the second half of last year and a Q1 that blew past the entire previous year. The authority RZLV is building in this space is real. They have secured the funding, they have the contracted revenue, and they have the institutional backing. The only thing left is for the daily stock price to catch up to the fundamental reality of the balance sheet. In summary, RZLV AI is a study in shifting expectations. The market narrative hasn't yet caught up to the $60 million Q1 revenue or the $232 million in contracted deals. While the stock sits at $2.72 today, the internal engine is spinning much faster than the price reflects. The contrast between being just another AI stock and being the control layer for commerce is where the opportunity lies. Whether you are using a Fidelity mobile app or a Robinhood investments account, keeping a close eye on the volume and institutional inflows here is going to be key for the rest of the year. The depth of their partnerships with Microsoft and Google suggests that the giants see the value, and it might only be a matter of time before the rest of the market does too. Maintain that focus on the numbers over the noise, and always remember that in a market driven by hype, the ones who follow the revenue are usually the ones who stay ahead. We have covered the massive jump in revenue, the high-margin software model, and the significant institutional buying. This is a company that is fundamentally different today than it was even 6 months ago. The reality of their growth has far exceeded the initial expectations of most analysts. As we move into the next phase of the year, the execution of their $360 million guidance will be the ultimate test of their authority in the space. Stay grounded in the data, keep an eye on those API call volumes, and watch how the enterprise rollouts continue. This is the kind of analysis that separates the casual observer from the serious investor. We will be here to track every move as the story develops, keeping you informed on whether the reality continues to outperform the market's expectations. One final thought for those managing their own IRAs or long-term portfolios through Fidelity IRAs or similar platforms. High-growth tech requires a different level of scrutiny, especially when it comes to cash runway. RZLV's fully funded status is perhaps their most underrated asset in a tight credit environment. It allows them to focus purely on product and sales without the distraction of the capital markets. That kind of focus is rare in the small-cap AI world and is a major reason why the institutional interest is so high right now. Watch the $3 level as a potential psychological breakout point. If the stock can hold above that, we might see a whole new wave of retail interest follow the institutional lead. Until then, the story remains one of disciplined execution against a backdrop of explosive demand for AI-driven commerce solutions. Disclaimer: this video is for educational purposes, not financial advice. Please do your own research before investing. Market involves risk. Like this video. Comment your thoughts. Share with your friends. Subscribe for more updates.